Claim your 4 free stocks with Webull, link down below.
Imagine a world without Google. No, seriously, a world without Google. A world where you couldn't do detailed reconnaissance on your blind date for tomorrow night. A world where you couldn't find out with the click of a mouse the GDP of Kazakhstan. A world where if you're not feeling well, you can't just sit down at your computer and figure out whether to just pop a couple aspirin or whether you need to call 911.
Google is one of the biggest companies in the world, and with its innovation, they changed the internet, changed the world, and became a trillion-dollar company in the way. But does this make Google stock a buy? In this video, based on a Morningstar report, we're going to look at Google's business strategy, economic moats, risks and uncertainty, stewardship, and profit drivers. Now, without further ado, let's get right into this video. But before we begin, if you want to make money in the stock market, do yourself a favor and smash the like button for the YouTube algorithm. Subscribe to our channel and hit the notifications bell. Now, let's talk Google stock. First, business strategy and outlook. Alphabet Incorporated is an American multinational conglomerate headquartered in Mountain View, California. It was created through a restructuring of Google on October 2, 2015, and became the parent company of Google and several former Google subsidiaries. Alphabet dominates the online search market, with Google's global share above 80%, via which it generates strong revenue growth and cash flow. Analysts expect continuing growth in the firm's cash flow as they remain confident that Google will maintain its leadership in the search market. Analysts foresee YouTube, the platform where you're viewing this video right now, contributing more to the firm's top and bottom lines, and they view investments of some of that cash in moonshots as attractive. Whether they will generate positive returns remains to be seen, but they do present significant upside. Google's ecosystem strengthens as its products are adopted by more users, making its online advertising services more attractive to advertisers and publishers, and resulting in increased online ad revenue. The firm utilizes technological innovation to improve the user experience in nearly all of its Google offerings, while making the sale and purchase of ads efficient for publishers and advertisers. Adoption of mobile devices has been increasing, as has usage time on these devices. The online advertising market has taken notice and is following its target audience onto the mobile platform. Google has partaken in this on the back of its Android mobile operating system's growing market share, helping it drive revenue growth and maintain its leadership in the space. Among the firm's investment areas, Google has made efforts to gain a stronger foothold in the fast-growing public cloud market. Google has quickly leveraged the technological expertise it applied to creating and maintaining its private cloud platform to increase its market share in the space, driving additional revenue growth, creating more operating leverage, and expanding its operating margin, which I expect will continue. Regarding Alphabet's more futuristic projects, although most are not yet generating revenue, the upside is attractive if they succeed, as the firm is targeting newer markets. Alphabet's autonomous car technology business, Waymo, is a good example. Based on various studies, it may tap into a market valued in the tens of billions of dollars within the next 10 to 15 years. Now, economic moat. Alphabet has a wide moat rating, thanks to sustainable competitive advantages derived from the company's intangible assets, as well as the network effect. Alphabet holds significant intangible assets related to overall technological expertise in search algorithms and machine learning, as well as access to and accumulation of data that is deemed valuable to advertisers. Google's brand is a significant asset, as Google It has become eponymous with searching, and regardless of actual technological competency, the firm's search engine is perceived as being the most advanced in the industry. Alphabet's network effects are derived mainly through its Google products, such as Search, Android, Maps, Gmail, YouTube, and more. On the one side, all the aforementioned products have provided Google with a massive consumer base that allows the company to collect data. On the other side, via its rich collection of data and large user base, Google can offer the best return on investment for advertisers and build a growing network of advertising customers. The addition of each new ad and advertiser improves the efficiency of Google's programmatic advertising offerings, allowing the firm to better monetize the work. In search, Google has successfully and consistently has monetized many of its technology-based intangible assets, from the original algorithms behind search to the current machine learning ones, which are also being applied to nearly every product. The company was recognized first for its extremely relevant results by PC Magazine in December 1998. From that point, it grew into the world's most popular online search engine and has maintained its leadership. Google processes more than 3 times and 4 times as many search requests as Bing or Microsoft and Yahoo respectively. Google Search's success stems from the relevance of its results to its users, and the likelihood that this relevance will improve as more data is gathered and analyzed, assumptions are generated, and predictions are created. Google has used machine learning technology to improve the user experience. The company has applied machine learning to its Google app with speech recognition, Gmail with Smart Reply, Google Photos, Maps, and many other products, including its cloud offerings. As technological advancements improve the user experience for each product, the likelihood of further usage increases. With more usage, more data about users' behavioral interests is gathered, analyzed, and applied to rank ads more accurately based on their relevance and click-through rate probability. The monetization of and higher ROI on machine learning stems from the fact that the technology increases the volume and click-through rates of ads, resulting in more ad revenue. Google's continuing investment in machine learning should help increase the effectiveness of ad rankings and placements, resulting in higher ROI for advertisers and increased revenue for Google. Google's investment in machine learning technology will also enhance the efficiency of its double-click programmatic advertising offerings, which consist of not only real-time bidding that the technology adjusts in real time based on the various search trends it recognizes, but also programmatic direct, where ad impressions can be purchased in advance. Programmatic advertising, and more specifically programmatic video ad spending, is expected to grow at a healthy rate. Based initially on its technology, Google has successfully increased its users' dependence on its products to keep transforming the usage of those products into something habitual. We have seen that with online search, as most people around the world continue to Google it, it has strengthened its brand, which I think has longevity. Google brand is a significant driver of user growth for YouTube, Maps, Gmail, and Chrome. Again, an expanding user base helps the company collect more data, which is monetized when applied to online ads. Google has the world's most widely used search engine, and such a large and growing user base has created a network difficult to replicate. An additional search on Google's search engine creates value for other users, as well as for advertisers and businesses. With Google's machine learning technology, more requests made by current and/or new users improve relevance of search results, creating value for users. More relevant results also decrease the likelihood of users jumping to another search engine, creating somewhat of a barrier to exit. For advertisers, value is created mainly through growth of the large user base to target, and from behavioral data compiled and analyzed. As users and search requests grow and more data is gathered, advertisers' demands for ads increase, helping Google to further monetize the network. By launching Android in 2007, Google positioned itself well in the faster-growing mobile ad market, maintaining its online search dominance and strengthening its network effect. With Google Chrome's browser on Android phones, more mobile searches are conducted using Google. In addition, more Google apps such as Maps, Gmail, and Google Play are used by consumers on Android-powered devices, further driving ad and other revenue growth. According to IDC, Google's Android OS powers more than 85% of smartphones around the world, compared with Apple's iOS's slightly below 15%. It's likely that the two smartphone operating systems will continue to power nearly every smartphone around the world in the long run, with Google's apps not only on Android devices, but also among the top apps used by iOS customers. In the expanding mobile market, we believe Google will not only maintain but expand its user base, positively affecting the network effect as it becomes more valuable to advertisers, resulting in more digital mobile ad revenue growth. Similarly, Android's network effect also creates more value for users. As the number of Android-powered smartphones increases, more developers will create more apps to be made available on Google Play and run on those smartphones, creating additional value for Android smartphone users. YouTube is also valuable, as it benefits from a network effect that creates value for users, content creators, and advertisers. With more viewers on the site today, more content creators will look to YouTube for content distribution. Continuing growth of YouTube's content library drives further viewer growth. YouTube's video platform has more viewers than other online video properties, making it attractive for advertisers. We believe growth in content library and in viewers on YouTube will drive growth in Google online video ad revenue, a market that is expected to grow at a strong double-digit compound annual growth rate. While Google has also begun to monetize YouTube via the subscription model, YouTube Red and YouTube TV, we expect the majority of YouTube revenue to remain generated through online ads on desktops and mobile devices. Google is expected to gain a foothold in the growing enterprise cloud market, but I do not think its cloud offerings create a network effect. Although Amazon is clearly the leader in this space, Google is expected to gain some traction and trail only Amazon's AWS and Microsoft's Azure in market share. Finally, while Alphabet generates economic profit through Google, which we think will continue, this profit would be higher were it not for Alphabet's strategy of remaining a step ahead in terms of innovation. In its other bet segment, Alphabet is betting on or investing in smart homes with Nest, using technology to enhance health with Verily, providing significantly faster internet access to homes with Google Fiber, self-driving cars with Waymo, and much more. Some of these wagers may not bring in any winnings, and it is too early to consider these businesses as contributors to Alphabet's economic moat, either in terms of intangible assets or network effects. However, the assets and continuing investments may give Alphabet an early edge as a first mover, although the sustainability of that competitive advantage will be determined over time. Now, profit drivers. We expect revenue growth to accelerate in 2021 as the economy recovers from the COVID-19 pandemic, helped by greater revenue contribution from YouTube and cloud and the acquisition of Fitbit. While new offerings will pressure gross margin, we look for operating leverage improvement beginning in 2022. The analyst's model represents a 5-year compound annual growth rate of nearly 19% for total revenue, and a 5-year average operating margin of 24%. Advertising revenue is expected to represent over 70% of Alphabet's total revenue, driven by continuing growth in overall digital ad spending, more specifically in search, video, and mobile. Analysts model 23% ad revenue growth for 2021 due to the economic recovery, which will be accompanied by higher ad spending across verticals, including travel. Analysts have estimated total Google ad revenue of $180 billion and $209 billion in 2021 and 2022 respectively. YouTube is expected to contribute about 14% of Google's advertising revenue in 2021, up from 13% in 2020. Outsized growth at YouTube should stem from its impressive reach and frequency, plus its video-only content format, which is attractive to brand advertisers. Google will continue to gain traction in the cloud market with 32% annual revenue growth through 2025. And when combined with non-ad YouTube revenue, Google Play, and sales of hardware products, Google's other revenue is expected to grow 41% to over $49 billion in 2021. For 2022, analysts expect 33% growth in other revenue. Analysts model 52.5% and 53.1% gross margins for 2021 and 2022 respectively, compared with nearly 54% in 2020 due to the higher cost of YouTube content. Now, let's talk about risk and uncertainty. The result of high dependency on continuing growth in the online advertising space, along with questions as to whether the company's moonshot investments will bear fruit. While Alphabet is facing a decline in online ad spending due to the COVID-19 pandemic, I think the impact will be for only 12 to 18 months, after which the firm will again benefit from the growing online ad market. On the other hand, positive returns on Alphabet's investments in moonshots could increase the company's value considerably. Although the moat sources of intangible assets and network effect will help Alphabet's Google retain its competitive advantages, minimal switching costs to utilize a rival search engine remains a risk for the company. This risk is discounted as Microsoft's Bing, the nearest competitor to Google search engine, currently does not have significant presence in the mobile market, which is one of the main growth drivers of the search ad market. The rapid adoption rate of additional online ad platforms such as Facebook social network could lower Alphabet's revenue growth, eliminating operating leverage and creating pressure on operating margin. In addition, Alphabet's Google faces antitrust pressure and various claims and investigations brought on by different companies and regulatory agencies regarding search bias and its overall market dominance in online advertising. Well, that's it for today's video. Will you invest in Google stock? Let us know in the comments down below. Also, make sure to smash that like button and subscribe to our channel.